Good afternoon, everyone. This is Jen Felton with Golden Care, and we're pleased to have Matt Sussman and Jennifer Howlett as our guest speakers today. They will be going over the United Security Assurance LSS and LSS Select products, along with some underwriting guidelines. And with that, I'm just going to go ahead and turn it over to Matt.
Thank you, Jen, and thank you, Golden Care, and thank you, everyone who took some time out of their busy schedule to spend some time with us. As Jen had mentioned, I'm here with Jennifer Howlett, our Supervisor of Underwriting. And today what we're going to go over is our LifeStyle Solutions and LifeStyle Solutions Select product lines. We're going to give you some examples, and then we're going to talk to you a little bit about our underwriting, how that works, give you some tips, and at the end we're going to open up for questions. I think it is really important, though, if everyone could take out a piece of paper and a pen, and as we go through the presentation, think about clients that you've worked with in the past who might not have been able to qualify for long-term care insurance because of a comorbid conditions or conditions that you might have thought that couldn't be underwritten. Today, we're going to be able to put more money back into your pockets and show you a way how we can cover your clients with long-term care insurance. Our niche is hard to place or decline long-term care insurance. Industry statistics show us that average 27% of all applicants are being declined. So roughly a quarter of the business that you guys are writing is being declined. What are you doing with that? Where is it going? How are we helping out these individuals? And this statistic doesn't even cover those individuals over the age of 80. Our products go up to age 85, so I know that this number is even higher, and we can help so many individuals securing long-term care insurance. 5 reasons you want to do business with us, and really the number one reason is because we can issue business. We can issue more business than any other company in the industry because of our flexible underwriting approach, and Jen's really going to talk about that in depth. How can we do it? And we're going to discuss that. We have the deepest underwriting breadth in the industry with 5 rate classes that will help you underwrite those individuals. We still have unisex rates, so for those female individuals who are applying a loan, our rates are phenomenal. One of the biggest things that we also see with a decline rate being so high, and a lot of business that we get in is from previously declined applications or applications that couldn't even be submitted, is we have an approximate 60% issue rate on business that's been sent in, that's been declined previously, with our Lifestyle Solutions or our Lifestyle Solutions Select plan, which is our higher risk or impaired risk plan. We'll talk about that. We have a strong comprehensive policy with benefits that can be used prior to going on claim. So your client will be able to utilize our services before, well before, they ever need to utilize claim services. We have an amazing home office staff here, and in a lot of cases, we will be the only option for some of those clients. And we're talking about individuals who have MS. Individuals who have MS who still can do all their activities of daily living, not using a walker, wheelchair, scooter. Someone who has Parkinson's disease that has the diagnosis, it's not really affecting. There's no other long-term care insurance carrier that I know of that will consider someone with those 2 conditions, or even insulin-dependent diabetics who have a higher insulin use. So we'll get through all that today. We do offer products in 22 different states. I'm going to leave this up on the map for just a few minutes so you can kind of take a look at all the states. So let's jump right in to our Lifestyle Solutions product. This product is a full comprehensive product that offers a benefit of $50 a day to $350 a day. When it comes time to home health care, we utilize it on a monthly benefit. So if your client has $150 a day, when it comes to home care, they have $4,500 in that month to utilize it. And what's so great about that is that we know when it comes to home care, not everyone's receiving the same level of care every day. So having the flexibility of a monthly benefit for home care is really beneficial. Our maximum benefit periods are 1 to 5 years. And again, our elimination periods will be decided on 40, 90, or 120 calendar days. The way we look at our elimination period may be a little different. If your client comes home from the hospital and they have an unpaid, let's say, family caregiver helping them out for 90 days, and then they come to us and say, we met the 90-day elimination period, we are going to say to them, you did not. The way we look at our elimination period is they must be responsible for payment for at least one of those 90 days. As soon as they pay that bill and being charged, that's when we start the clock ticking for the elimination period. If they are in the hospital, admitted 3 overnights, meet Medicare eligibility, and are in a nursing home, Medicare will pick up for the first 20 days if they meet eligibility. The Medicare supplement will pick up the deductible for the next 80 days. That's encompassing 100 days. That, as well, will qualify towards the elimination period. So if they were to come home after that 100 days, they would have met their elimination period, and as long as they were eligible for claim, we would start paying them their benefits. We will pay 100% for home care, as well as adult daycare. And we are one of the companies that has the oldest eligibility age of 85 years old. So we can look at individuals from 40 to 85 years old. We do have waiver of premium on these policies. And if the policies are designed correctly, they also do meet partnership status. It is a pool of money plan. So if you're using $100 a day and you have $150 a day, that extra $50 does stay in the pool, so the policy lasts a little bit longer. As I mentioned, we had 5 risk classes. 4 of the risk classes are in this product line, the Lifestyle Solutions, the preferred standard Class 1 and Class 2. What we see most often is our Class 1 or Class 2. Just because someone has not been approved by another carrier doesn't mean they automatically have to go into our impaired risk product. We used to offer 60% of the policies in our Lifestyle Solutions versus our Lifestyle Solutions Select. The ratio has changed. It's about 70-30 now. So 70% of all the people who are applying for coverage fall into the Lifestyle Solutions product line. So that's great to know as well. Our discounts for spousal or partner married, they do get 15% for just being married. If both of them do take the policy with us, they will each get a 20% discount on the policy. And that goes for partners as well. Inflation factors, pretty standard in the industry today, 3 and 5%, both simple and compound. We obviously see a lot more 3% today than 5%, but we still offer the 5% compound. And a benefit that can be used prior to going on claim is our service program, and I will talk a little bit about that as we continue through the presentation. It's always great to see what kind of client can we accept and what kind of clients do we accept. So I have 3 examples here. We have the first profile. We have a 65-year-old female. She's 5'2", 164 pounds, has some hypertension, and she's taking 2 medications for that. She was applied and approved as a standard underwriting class. We have a 63-year-old female. She's 5'3", 175 pounds, a little bit of tremors, essential tremors, taking a medication for that, some depression, anxiety, left cornea replaced within the past year. Her back's not doing so good, but she has some back pain and hip pain. She previously was on a narcotic pain medication. We will not look at anyone who's actively on a narcotic medication. So that's important to understand. On the Select plan, not on a regular. Not on a regular plan, right. And currently she's taking a muscle relaxer and some diabetes medications as well. She did apply for a standard underwriting class, and once we did the phone history interview and looked at the medical records, we did counteroffer at a Class 1. And our third case here is a 67-year-old male, 6 foot, 189 pounds, some kidney issues, hypertension, abnormal gait, ataxia, lower back pain, some PT for the back pain and gait, and they were previously declined by a prior carrier for back and gait problems. This is a perfect example where they applied and were approved as a Class 2. And this is a perfect example, as I was saying, that they called in, as Jen just mentioned, they called in and they talked to one of our underwriters, and they gave them all the information they knew about that individual, especially because they were declined from another carrier. They had the reason specifically why they were declined. After we addressed that information, got the medical records, we were very comfortable in offering them at a Class 2 underwriting. And I think one of the most important things is utilizing our underwriters to help you make the sale and help you determine which is the appropriate underwriting class. And Jen will talk a little bit about that. Let's take a look at our LifeStyle Solutions Select, some of the features on this plan. Looks like the maximum daily benefit is $50 to $150 a day. And you'll notice some of the benefits are a little less than our Lifestyle Solutions plan. And the reason being is because with this particular plan, we're taking more of a risk for those individuals, but it's a calculated risk. And there's things in this policy that protect the company from the high risk. Our elimination periods are going to be 90, 120, or 180 calendar days, and the calendar days works the same. Our home care and adult daycare service is at 50%. So you can see this is one of the ways that we can limit the exposure to the company is by reducing the available home health care benefit to them. Issue ages are the same, 40 to 85. Now we have 3 plans for this particular select program. We have option A, option B, and option C. Option A is a 1-year plan with a minimum of a 90-day, 120, or 180-day elimination period. Option B is a 2-year plan with a 120-day or 180-day elimination period, and option C is a 3-year plan with a mandatory 180-day elimination period. So depending on the plan or the option that you choose, it will also dictate what elimination period that you do choose as well. Option B, our 2-year plan with a 120-day elimination period, is the policy that we see most often coming in and most getting issued as well. That is the difference between 180 days and 120 days and 180 days premium-wise is not that much. So we do, when you're pricing, take a look at the 120 days, and if we can issue the 120 days, we certainly will. And that talks about the flexibility. If we get the medical records in and you're looking for a 120-day EP on the 2-year plan and we're not comfortable with it, we might say, all right, we're going to give you option B, 2-year plan, but we need you to go to 180-day. So we're really going to try to find ways to be able to issue that product and that policy for you to help you protect your client. Again, this is a pool of money, and the discounts on this is a little bit different. If they're married or a joint, they do get a 10% discount. Now, we always encourage people to stay with the same company, so if one of the spouses in our Lifestyle Solutions Select and one is approved and takes our Lifestyle Solutions, the individual who has the Lifestyle Solutions will get a 20% discount, again, keeping it with the same company, and the individual with the Select will get the 10% discount. So that's an overall 30% discount for keeping them with the same company. Inflation riders are the same, and there is a pre-existing condition of a 6-month waiting period. And simply what this means is that for the first 6 months that the policy is in force, if the client needs to go on claim for any pre-existing condition, we will not cover it. Again, this is not really a big deal, but this, again, is one of the ways we can protect ourselves from the quick hits. So if the client says, you know what, they need care month 5, and they don't tell us until month 7, they're still not going to qualify because they needed care prior to that 6 months. These plans are also partnership applicable if designed correctly, and the service program will apply as well. 3 examples of this case for Lifestyle Solutions: a 54-year-old male, 6 foot, 200 pounds, has some RA, type 2 diabetic, high blood pressure, some kidney disease, hep C, and osteoarthritis. So this individual submitted the application as a Class 1. After reviewing, we did issue it as Select. This is a great example of an individual who didn't really talk with underwriting, because we know with everything going on, a Class 1 was not appropriate for that. It was definitely a Select case, and one that we were comfortable with. Second profile is a 61-year-old female, 5'6", 160 pounds, RA, osteoarthritis, fibromyalgia, Sjogren's syndrome, chronic prednisone use since 2006, spinal stenosis with degenerative disc disease, breast cancer, treatment needed 3 years ago, so thankfully no current cancer, a neuropathy, history of DVT, and multiple other conditions per medical records. So we got a lot going on here. This is an example of, are we comfortable in taking on the case, or are we not comfortable? And we were comfortable in issuing this as a Select 1 year with a 180-day elimination period. So again, trying to find ways to issue the business, but at the same time protecting the company, because that's most critical. And the third profile is a 66-year-old female, 5'2", 110 pounds, osteoporosis with 2 compression fractures, rib fracture, ankle fracture, recurrent ankle pain within a year of an application, multiple level cervical spine issues, gout, COPD, some issues with the knee, left knee arthritis, applied for a Class 2 and approved at Select. Again, this is an individual who obviously called in, and after getting the medical records, we determined it needed to go into Select. So these are 3 great examples of some of the conditions that we can take, and also examples of how we utilize counteroffers to help you out there in the field. So I'm going to leave this up for just a minute or so. This is the difference between our LifeStyle solutions and the LifeStyle solutions on product lines. Just a quick glance reference that you can see on the left-hand side is the LifeStyle solutions, on the right-hand side is Select, and you can see some of the additional options we really didn't even talk about, such as the alternative plan of care, finding ways for you to stay at home, finding ways for the policy to never become outdated with the utilization of alternative plan of care. The wellness program available on both. One of the things that the Select product doesn't include is waiver of premium. So when that individual is on claim, they continue to pay their premiums. And again, that's another way that we can help offset and protect the company from accepting these risks, but still making sure it's a good risk. So let's talk about the LifeStyle Solutions, the service program. This is really, really unique. Really pleased to have this in the policy. It really consists of 3 different programs. First, we have a wellness planning program, which allows a client to utilize our services to keep them healthier for a longer period of time. And what happens is, with the wellness program, it's a built-in benefit. It's not mandatory. If they would like to use it, that's great. If not, they don't have to. About 60 days after the policy is issued, we're going to send them an introductory letter asking them if they'd like to take part of our wellness program. And with the wellness program, if they do, we're going to send them a couple vetting letters asking them what are they looking to try to accomplish. For instance, someone has a very high stress level. We're certainly not taking over what the doctor's doing, but we're helping them. So we might come back and determine that they have a very high stress level, and these are a couple of things that we can help them with, such as yoga classes. Will yoga be appropriate for them? And they might love that idea, but they don't know any yoga studios around. Well, we'll be able to help them find those yoga studios around. So that's really kind of neat as well. Free consultation or referral services, offering help to find resources and people need. Let's say our clients need, their spouse is too old now and not healthy enough to mow the lawn. They don't know any reputable services, so they can actually call our office and we'll actually find services in their area that can help them out with lawn mowing. They need a roofer, they need a plumber, and they're all senior friendly, as Jen had mentioned. because we really want to make sure it cuts down on auto reviews, because it's definitely something that's prevalent, and by utilizing the services we can reduce it, because we do vet those resources that we refer to you. And of course, the care planning, when it's time to need care, calling our office and us helping out with the claim, helping your client, I should say, utilize their benefits to the best of their abilities and maximize the benefits so they can get the most out of the policy. So in kind of closing the product line, before I turn it over to Jen, why the Lifestyle Solutions and the Select? 4 underwriting classes to issue more of your business, the impaired risk product that can issue policies to conditions that no other carrier can do. We have a 60% issue rate from previously declined applications, which is huge. Issue age up to 85 years old, which is one of the oldest in the industries. The unisex rates, as well as the build-in wellness and service program. So these are all great reasons why to utilize the Lifestyle Solutions and Select. But really it boils down to the number one, if you can't get the policy issued, benefits really don't make a difference. So at this time, Jen, I want to turn it over to you so you can talk a little bit about our underwriting.
Thank you, Matt. And as we know, it's all about the stamp, approved versus denied. I haven't seen this slide in a while. I had to refresh my memory. Nobody likes denials. The client doesn't like denials. The agent, of course, doesn't like denials. So we do our best with our flexible underwriting to try to issue things that come across our desks in any way possible. Something that will benefit all parties involved, the company, the agent, as well as the client. They might get upset at the first thing they look at being that it wasn't what they applied for, but when you look at the alternative, it would be the denied stamp. Sometimes, with a little bit of salesmanship, we can get that policy issued and you can place it and everybody's happy because everyone got something out of this application and some good coverage.
And the stamp on your desk, the approved stamp, is a little bit bigger than the denied stamp.
Yeah, sometimes it is. It depends on the day of the week. Or how well I slept the night before. No, I'm only kidding. No, we really do try to issue what we can, utilizing the counteroffers like Matt was talking about earlier with maybe increasing an elimination period or reducing the benefit period. Those are all tactics that we'll use to try to work with the agent and get some coverage issued. The Maze of Underwriting. There's so many different underwriting guides out there that your mind wants to explode. There's so many different medical conditions out there that people are being treated for, new conditions that have come up in the past couple of years that we've never had to underwrite before. So thank God we have the internet and some good websites that we can do some research on and find out about these conditions. But then when there's multiple conditions, how do you look at the underwriting guide or these conditions and try to develop a plan for this person? Everybody's different, and it's a case-by-case basis, and a lot of things, nothing is black and white, and we try to do the best we can for each individual person using lifestyle underwriting in combination with their health conditions. So hopefully we can help you navigate through that underwriting maze. Why we can do the things that we do here. Our underwriting department has a 100-plus years combined experience in underwriting, claims, and agency service. So we're getting all areas that are mapped out in this application process. Our director of underwriting, Suzanne, was an agent in her former life. So she has that agency background and can help us understand what you go through out in the field. And she's able to work with the agents on a special level because of that history she has. Personally, I've been in claims, and so has one of our other underwriters, Penny. So we have dealt with the back end, receiving these claims for people. So we know what conditions kind of move into a claims type of scenario, and also what the recovery times are. So maybe it wouldn't be such a long-term care risk to take on a certain thing. Maybe we just need to increase the elimination period. So again, that's where those counteroffers may come in for certain health conditions.
Just to kind of, I think all the underwriters really have this philosophy as well. I think the minimum time with our underwriters is 10-plus years.
Yes.
at least. So
Mary has been with us quite a long time as well.
Yeah, so it's really a hands-on approach, especially. I think the most important, as Jen had mentioned, is really the fact that the director, Suzanne, she was in the field, and she knows what it's like. So we really try to find ways and really try to help when you call on the phone to really get the right answers for you based on the conditions that are going on. Because we know counteroffers are even more difficult after someone's been approved. And we pride ourselves on being able to ask the questions that maybe, you don't know the answers to, but being able to get those answers so when you do get a pre-qualification, it's a very accurate pre-qualification. And I always say, sometimes the underwriters will not give you a pre-qualification decision because they don't have enough information. And at first, for me, I know it was, what do you mean? I just want an answer. Well, they really want to help you issue that business, but they want to give you the right underwriting category as best as they can.
We don't want you to waste your time or waste our time. So we're trying to work together
Absolutely.
to gather information up front. And that's what the pre-qualification calls are so important in doing, whether they're done through email or over the phone. Sometimes it might take 3 phone calls or emails back and forth to get all the information we need. It's tedious in the beginning, but it does pay off in the long run.
Without a doubt, it pays off, and I encourage everyone, pick up the phone, speak to an underwriter. If you're in the house with the client, it's a great tool to utilize. Calling the underwriter, they're going to ask you questions about the conditions that you might not even or think to ask. That also could help you with the sale, because the client will sometimes get uneasy about some of the questions that are being asked, but important questions that we need to know regarding whether we can even consider offering them coverage or not. So, I always say bets are off when we get the medical records, but if there's no changes in the medical records from what you have told us and there's no surprises, you are going to get an issued policy pretty close to the pre-qualification.
Absolutely. Absolutely. And no, that's okay. I like the interjection there. Our common sense approach to underwriting, with all the experience that we have from all 3 avenues, we take a logical risk assessment of morbidity versus mortality. Like I said, from a claims perspective, we know what's coming in that could end up in a claim pretty quick, or how long a claim may be. So, or if they have multiple conditions, that may be end-of-life conditions. That's a horrible way to think of things, but if somebody's going to die from their health issues, that's not a long-term care risk. So we have that common sense approach from morbidity versus mortality and the medical treatments that are out there that can sometimes extend mortality, and that's where the real risk assessment comes in. Our rates are based on actuarial formulas that allow adequate reserves for future claim obligations. Some people think our premiums are rated high, but there's a reason for that. If we're taking on the higher risk folks, we're going to have higher premiums. There's formulas out there that actually let us do this. So that was a very careful calculation done by our actuaries.
And we do a means testing, and we review the numbers all the time, yearly, to see are we getting the right premium for the risks? Are we getting the right premium for what's going on in the industry? And we've never had a rate increase on this particular product line. Will we? I have no idea. But I do know that we're very comfortable with the rates. And as Jen had said, with our LifeStyle solutions, we have to get the right premium. So the LifeStyle Solutions Select, it's like 300% more expensive than our standard rating, but yet we're taking on that much more of a risk that allows us to do that. So I think that's important as well.
And the last thing, as we've touched base on already, is appropriate utilization of counteroffers, high elimination periods, and benefit limitations. So our underwriting process starts when we receive the application, and the personal history interview, or PHI for short, is attempted within 48 hours of receipt of the application. Sometimes it will even be attempted the next day. We try to enter our business the day we receive it. Sometimes when we get a big bulk of business, it'll be done the next day. But the phone interviews are attempted immediately. So if there is a certain time of day that your client is most easily reached, if you can indicate that somewhere on the application, that helps us out tremendously when we're trying to reach these folks. medical reports requested when somebody was previously declined, when the applicant is over the age of 80, insulin-dependent diabetic or has been a diabetic for more than 10 years, when they're applying for a 5-year benefit period, replacing existing coverage, and of course, underwriter's discretion. Medical records can be requested from as many doctors as we feel are needed. Primary care physician is typical, but sometimes in cases of rheumatoid arthritis, or that would be a rheumatologist, or osteoarthritis if they're seeing a rheumatologist, we'll definitely get those records. Specialists, Parkinson's disease, stroke history, if they see a neurologist on a regular basis, we definitely want to get those records. MS would be a neurologist. So we always want to have those doctors, that doctor information on the application as well. Face-to-face assessments have not been requested in a very long time. We still keep it on here because it is a fallback if somebody has not been to a doctor in quite a while. But we do rely on the medical records the most, as well as our phone interviews, because they are very thorough, and we get a lot of information from both of those pieces.
And with the face-to-face, we used to do that with all of our LifeStyle Solutions Select applications, but the technology that we've developed in here allows us no longer the need for that, because the information that we get from them typically is the same information as we
for the phone interview,
as if we would see the face-to-face. Now, you definitely have those clients who, when someone's coming to the house, puts the walker in the closet.
Right, they'll hide stuff.
But we would not find that anyway if we were in the house. So,
right.
We're doing it pretty thorough, and we're pleased not to have to do the face-to-faces as nearly
as much. Yeah. Okay, these are our sweet spots. These are conditions that a lot of companies will not insure, that we have issued many a policy on. Diabetes with mild complications, history of stroke with no residuals, heart disease, multiple strokes, TIAs as long as they're functional, rheumatoid arthritis controlled with immunologic medications or anti-inflammatory medications, multiple sclerosis, Parkinson's disease with minimal symptoms and progression, multiple or combinations of cardiovascular conditions such as AFib, stroke, heart attack, CHF, cardiomyopathy, numerous conditions. When you throw more than 2 or 3 conditions into a health history, a lot of companies will not accept them. So we have the ability with the 5 rate classes to consider these folks, and again, either upping the elimination period, reducing benefits. Counteroffers are constantly moving through here. So these are definitely our sweet spots. Previous declines from other companies, 90% of these conditions will be on that application.
Perfect.
So, again, with the pre-qualification calls, feel free to email or call in. You can ask for just the underwriting department and say that you're calling in for a pre-qualification, and you will get somebody qualified to answer your questions and help you walk through with the client some important questions to do the pre-qualification.
Yeah, I think it's important also to say we have extensions, but we have a live operator still, and it's nice always to speak to someone live, and they'll be able to help you out. Some of the tips for doing business as we get closer to the end of the presentation, we do ask that you send a 2 months premium plus a $25 policy fee. If the client is declined, obviously the premium comes back, and so does the policy fee as well. We are now accepting faxed applications, and just recently, which is not even on the slide, we do have an e-application for 3 of our states. We will be continuing with those. Right now it's Pennsylvania, Texas, and Illinois. We have a fillable application with DocuSign technology, so someone can go in, completely fill out the application electronically, and sign, and have the client sign and send it back to us, which is really cool. We're really excited about that. We also do take Visa, MasterCard, and Discover with our LifeStyle Solutions and our Select. Using the credit card, I know a lot of people love points, so using the credit card is a nice way to gather some points. But also, when we use a credit card, there's no money required. So they just simply put in the credit card information, and once we receive the policy delivery receipt back, that's when we will debit their credit card for the premium. So that's always a nice feature to have and utilize. So how can you access some of the information? Going on to our website at usafpa.com, really you can find everything there. You'll be able to find our brochures, the rate guides. If you need the quoting software, you can download the quoting software. Once you become appointed, you'll get an access number and a code to get in. Or you can always do it the old-fashioned way, which we also love. You just pick up the phone and give us a call, 800-872-3044. Or give a Golden Care call, and they'll be glad to get you the information as well. But we really try to make it easy for you to gather all this information and have what you need at your fingertips, especially today with the applications in those 3 states. You just log into our agent center, and you'll be able to access the e-application right from there. We also have 2 methods for the quoting. As I mentioned, you can download our software, but you also can use strategies for our Lifestyle Solutions and the Lifestyle Solutions Select as well. These are great tools. Both of them work very nicely, and we're pleased to be able to offer both of them to you. So if you have any questions, please feel free to give any of us a call here. Get some of the contact information up there. We'll see. And it's really our pleasure to be able to help you guys and help you secure coverage for your clients. And if you have any questions, please give us a call. Give Jen and her team a call, 800-842-7799. It's a great partner to work with, and we really appreciate the opportunity to work with you, and we look forward for ways to earn your business. In closing, I do want to talk about one big score contest we have going on right now. It's through June 1st through August 31st. It's an incentive program based on submitted business. All of our long-term care insurance policies. Participants can earn $100 cash for each long-term care application submitted, or $50 cash for any short-term care or home health care application submitted. There is a 60% issue rate that is needed in order to qualify. I think Jen has more of this information, or we can actually send it out to you guys as well. But we're really excited about our summer contests that we have, and we really, again, appreciate all that you guys do for us. And if there's anything that we can do for you, please don't hesitate. Give us a call. Give Golden Care a call. We're here to earn your business. And at this time, Jen, I want to thank you, and I want to turn it over and open it up for questions.
All right, thank you so much. I've got some typed-in questions, so I'm going to ask those first before we do open up the lines, because sometimes then we'll avoid that feedback. The first question I have is, will it ever be offered in Florida or New York?
These are 2 great questions. So let me answer the easy one first. New York, I don't really see it being available in New York anytime soon. New York is a very difficult state. They require that you have a physical presence there, so it's not in the plans anytime soon. Florida is another story. We anticipate 2018, early 2018, we will be back in Florida. So we're looking forward to that. So stay tuned on Florida.
Perfect. Next question is, to clarify, no rate increase on either product line, and how long has each been available?
That's absolutely no rate increases since 2009 when these products were rolled out. Interestingly enough, the Lifestyle Solutions and Select was approved in Pennsylvania first, Illinois, and what we did is we rolled it out to those 2 states. We did market a study, and we determined at that time we needed to make some changes. We made those changes, and we rolled out to all the other states. And since then, we have not felt that we needed rate increases. And again, we are monitoring this business all the time, but we feel currently the way it's priced, with the current interest rate as low as they are, we're still comfortable with the premium that we're getting.
Great.
Jen kind of is just mentioning to me, what about the rate refresh? So that's a little different story, not a rate increase, but when we introduced our products to some new states, those premiums were a little bit higher than in some of the other states, again, just based on what we have found in those particular states in our market research. But no rate increases that affected any clients. So great question.
Good. Next one here is, can you clarify how the pre-existing conditions work?
Absolutely. So pre-existing condition, let's just say I'm going to go, give me a condition.
Diabetes.
Diabetes.
It's a common one. So you have diabetes, you apply, even if you have like neuropathy, we'll say you have diabetes with neuropathy. You apply for the coverage, you get approved on Select.
Let's say you get approved January 1.
Okay.
Make it easy.
Yeah. You get approved January 1st, and you fall because of your neuropathy. And you end up in a nursing home because you broke your hip.
In April.
The doctor has it clearly marked in the record that the fall was due to imbalance and things from not being able to feel your feet when you walk, which is what neuropathy can do. So that claim, if submitted, would not be covered because the diabetes with neuropathy was a pre-existing condition.
Okay.
If you fall after June 15th, then that's past the 6 months. So then the claim would be considered for coverage, and they would look at the claim triggers accordingly and consider the claim at that point.
Yeah. You know, we don't see a lot of that.
No, we don't.
But again, it's just another way that we protect the company. You know, if we are accepting a client who needs care within 6 months, we're not doing something right.
The underwriters are not doing what they...
Obviously, things do happen. We understand that. But, again, we're taking on more risk, so we need to cover that quick hit. But the 6 month, if it's from a condition that is not pre-existing, it's covered right away.
Right.
And that only applies to the Lifestyle Solutions Select product, none of the other product lines. So great question, again.
Another typed-in question is, what are the policy triggers? Is it typical to 680Ls, and who determines this?
Yes, this is a tax-qualified plan, so it is the chronically ill definition that meets, it's, again, your doctor that will certify that you need ADL assistance. Obviously, we will review that, making sure that it is a legitimate reason for your health. So, you know, the traditional chronically ill definition is the way you trigger it. And that includes cognitive impairment.
Severe.
Okay, questions keep rolling in. Let's see. The next one is, can we look at premium charts at this point? Do you have any premiums you can pull up or anything? Or otherwise, I can just have them call into Golden Care and we can run them some quotes too.
Well, I don't have any premium charts. You know, what we find is if you're just comparing us to another company, it's really hard because what are the conditions that that individual is going to have, and what's the right or correct underwriting category? So we don't really have any premium charge, but if you call in to Golden Care or give us a call in marketing, we'll be able to say, all right, tell us about this individual, and we'll be able to tell you what underwriting category and be able to run a quote for you.
Okay, another typed-in question. The elimination period. If they had a paid caregiver on day one, but had relatives step in for the rest of the elimination period, would the EP requirement have been met?
That's a super question, and the answer to that is technically yes, because they met the qualifications of meeting at least 1 day of paying for caregiving. Now, I know corporate won't love that, but that's the way it's written. So yes, technically, they would meet that eligibility.
Great. Next question. Can you use your care in other states?
All these products are portable. So if you have, let's say, a policy that you purchased in Pennsylvania and you move to Texas, absolutely you can use the care in Texas or any other state as long as it's within the U.S. Great question.
Looks like one more typed-in question. Someone has a client that's diagnosed with Parkinson's but no problems with ADLs at this time. They're okay, right?
They should be fine on the LSS Select plan. If they use anything more than just a straight cane, that could pose a problem in underwriting because that would show imbalance and difficulties with ambulation. But yeah, if they're either on 1 or 2 meds or no meds and they're completely independent with their ADLs and IADLs, then by all means, LSS Select.
And what's interesting, too, we find that someone might have Parkinson's, but they've declined for another reason.
Right. Right.
You know, it's got nothing to do with the Parkinson's, diabetes, or MS. It's
right.
a totally unrelated condition to those that will make them ineligible.
Yeah.
So based on just that one condition, yeah, we would consider it. But again, that's why it's so critical, and we really encourage this. Give the underwriters a call and give them all you know about the client, and we'll be able to tell you what we think, if it's something that we can issue or not.
And medications are incredibly important when you call in because medications, they might not be saying a condition that they're taking a medication for, and that'll trigger a question from the underwriter to say, well, what is that medication being taken for, like an arthritic condition? Well, where is their pain? Have they gotten injections? Have they gotten physical therapy? So there's more questions that can be pulled just from one simple medication. So those are that's the ultimate list that I would need. Height, weight, and medication.
Okay. And that is actually another question that just came in. What about height, weight issues? Do you have I'm assuming you have the chart inside your underwriting guide?
We do. We do. And we stick pretty close to it because it is a pretty liberal weight chart when you get into the higher class ratings. So we do stick to the standard class 1s, 2s, and select. So it is important, especially when they have other conditions associated with an underweight or overweight build. With an underweight build, you find problems with osteoporosis and arthritis. In the overweight category, numerous conditions, heart disease, cholesterol, diabetes, arthritic issues like replacements and back pain and things like that. So the combination of everything put together is definitely going to bump somebody up in a rate class.
Great, thank you. You know what, 2 more questions came in. If I can just ask you those, and then I will shut it off. And if anyone has any additional questions beyond that, they can certainly give us a call here at Golden Care at the 800-842-7799. So the next one is, if a spouse has coverage from another carrier, is there any discount if they buy your product, or is it both of them would have to apply?
Well, no, actually, the fact that they have a spouse, regardless if they have coverage from another company, will automatically make them eligible for the spousal discount, either the 15% or 10%. And really, industry-wide, the way we look at that is the fact that we know that there's someone in the house, and it's less likely they'll go on claim as quick. So if there's someone in the house, they're more likely to take care of them before they actually file for a claim.
They have a support system.
So yeah, absolutely, we will offer that discount if they have a spouse or a partner.
Perfect. And the last one here is, do you offer any list bill for employer-sponsored cases?
We absolutely do. We do have a list bill that we can generate for employer or even association business. In the state of Pennsylvania, is the only state we have a discount program available for associations or employers, but in every other state with the LifeStyle Solutions Select, we can list bill for companies as well.
Well, great. I think that brings us to the end of the questions. Thank you again, Matt and Jennifer, for showing us a great product to help us ensure more clients out there for long-term care. I think this is a great product line to be able to, if somebody really wants long-term care, and they can definitely get it, hopefully, through you guys' product line. So thank you so much for that. And again, if you have any questions or need any materials or you haven't been contracted yet, we can certainly take care of you here at Golden Care at 800-842-7799. But again, thanks again, Matt and Jennifer, for being our guest speakers today.
Thank you. Good seeing everyone.
Thank you.